a lot of what we're seeing with AI is like the build out. You need chips. I don't know whether the use case for every, for across the board, it's going to help every company be better, more productive, do more things. How many years before that's really a major contributor to just the prosperity of these companies and how well they do? Because right now it just seems like the people making the pipes or whatever you want to call it, the chips, the ultra-fast chips, they're the ones benefiting. When does everyone else benefit from AI? 5 years?
I think it's before that. I think, by 3 years, we'll have a much better sense of where AI is really producing.
We're ahead of ourselves then, if it's 3 years away.
I think we're a little ahead of ourselves, but that doesn't mean that they're not going to build out the infrastructure. So this is going to go in cycles. So we still have to build out the infrastructure to run AI. We don't have that full infrastructure yet. And you see that with Nvidia with their new chip, the Blackwell. The marketplace still has to adopt that. And what amazes me, I've been doing this for 40 years. I've never seen a company like Nvidia before make this major transformation and then have earnings hit the bottom line so aggressively. They're definitely going to be the leader in the market. They're going to probably take about 80% of the share, but it's not going to be a straight line. But I do think this year is a good year. We may have a lot of chop next year. But I think when we go into the back end of the decade, you're going to start seeing companies move at a pace that we have not seen since 2000. These are very early stages for these moves in these companies.
Right.
After the blow that Nvidia stock recently received, having dropped by more than 10% over the last week, a glimpse of hope can still be felt in the air as the investment bank Jefferies decided to increase their price target on the stock from $135 to $150. As of the time of this video, Nvidia stock is trading at around $126, so Jefferies is seeing an upside of nearly 20%. And you might not be too surprised to hear that the bank believes that Nvidia will still go further to dominate even a larger portion of the current thriving AI business. And this is evident in Nvidia's desire to increase their supply chain capacity for products based on their groundbreaking Blackwell microarchitecture. So, in today's video, we're going to talk about why the investment bank is still bullish on Nvidia, why Nvidia stock is still a good buy for investors, and why it's not too late to go all in on this stock. But first, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
All right, well, does NVIDIA's slideshow signs that the AI trade might be unraveling? We want to talk about that with Kenny Polcari. He is Case Capital Advisors managing partner, here to help us answer that question. Kenny, what do you think?
So I think it's way overblown. I don't think people need to be nervous about what's happening in Nvidia. They should not be surprised. The stock has done nothing but go up in a straight line. So a 13% pullback, yes, does represent a little bit of a sale. But quite honestly, you could see this thing drop another 5 or 8%. If we saw a 20% pullback in Nvidia, I wouldn't be surprised at all. It's up 140% just this year alone. A lot of it driven by this AI theme and this AI mania, which, on its own probably got a little bit ahead of itself. And so therefore, I would look at this, and I continue to tell clients, I would look at this as an opportunity, meaning take your time, be strategic. If you see further weakness, it's okay, because this is a long-term story about the future. This isn't about today or tomorrow.
Despite having briefly become the world's most valuable company, surpassing the two tech giants, Apple and Microsoft, Nvidia dropped back behind them after the stock closed down 3.2% on Friday. Nvidia's shares have risen by 156% so far this year, reckoning Friday's close, much higher than the S&P 500's 15% rise and the Nasdaq's 18% rise. This raised concerns that Nvidia stock might be overvalued, despite the enormous profit and revenue growth they have had this year due to the robust demand for the company's AI chips. However, Jefferies analyst Blaine Curtis is not going along with the rising worries. He wrote in a recent research note that Nvidia is still in control of the ecosystem on both the hardware and software fronts, and their current cadence of new generations should make that lead only grow further. Curtis also stated that Nvidia's NVL72 liquid-cooled rack systems are the next revolutionary level up in the infrastructure of artificial intelligence. Moreover, Jefferies' forecast estimates that Nvidia's data center segment could reach a staggering $164 billion in revenue by the year 2028, exceeding the consensus of $141 billion. Correspondingly, Curtis has raised his price target on Nvidia stock from $135 to $150 while keeping a buy rating. Meanwhile, Nvidia has signed a deal to deploy its technology in data centers owned by the Qatari telecom group Ooredoo. And if Nvidia's partnership with Ooredoo succeeds, many other Middle Eastern companies will end up partnering up with Nvidia. According to consultancy PwC, the region's expected future share of the world's AI market will be 2%, or $320 billion approximately, by 2030. Yet this forecast was made about 6 years ago, before the region attracted billions and secured partnerships with major global tech giants such as Oracle and Amazon. Most recently, in April, Microsoft raised $1.5 billion of investment and partnership with the UAE's leading AI entity, G42. So, Nvidia entering this market is great news for investors, as Nvidia realizes the huge opportunity that lies ahead in the MENA region. And as a result, Nvidia is trying its best to secure partnerships with Middle Eastern companies, subsequently increasing their revenues and stock price. Owing to this, Jefferies is very optimistic about Nvidia stock after its analysts, in cooperation with Fubon's analyst Sherman Shang, raised their estimates for the sales of the company's GPU racks. The Taiwan-based Fubon Financial suggested a 25% capacity increase for Nvidia's supply chain for Blackwell-based products, while other firms expect as much as a 40% jump in production capacity. Based on these conclusions, many analysts have raised their estimations for the GB200 NVL, expecting volumes of 60,000 units instead of their previous estimate of 40,000. This is incredible news for Nvidia, as a rack will definitely cost more than a single chip, resulting in a higher revenue for the company. With all of this in mind, should investors be rushing to buy Nvidia stock? Let's find out. Hello everyone, and welcome back to Investocracy.
Is the huge swing in Nvidia shares a sign of market fragility or actually market strength, as Danny pointed out, given the fact that we're not seeing some broader retrenchment?
I mean, if you look at the chart on Nvidia, you can barely see the correction. So, I mean, on a percentage basis, it's down something like 10%, but you have to peer really, really carefully at the chart to see that move. So, I don't think it means anything.
There is this issue, though. How do you even understand the valuations at a certain point? How do you even understand how much future profits are you actually factoring in? I understand the idea of being bullish on AI, but how do you understand when it's so fully valued that you're jumping on a train that's so overpriced?
I absolutely never do. I just don't know. And I'll take the converse to it, which is, one of the things I learned running a hedge fund is that shorting a stock solely because of valuation is a death wish. I made that up too, by the way.
That's great. Trademark.
But what I mean by that is, you go short a stock because you think the valuation is insane, but your entire thesis is just it's very expensive. The people who own that stock know it's expensive, but they're buying into a story. And as long as the story is intact, like Nvidia is obviously intact, the story is going to continue. So you have to have, when you short something, not just that it's expensive, it's that the story is going to break. And as far as I can tell, the Nvidia story is going to last for years. So, I don't think all that much about the valuation of Nvidia.
All the factors that we've talked about explain why Wall Street is still backing the chip manufacturing giant, and why Jefferies is even raising their expectations, disregarding the recent drop in the stock price. Nvidia has always stunned Wall Street, not only by their incredible ability to grow their profit and revenue in triple digits, but also by continuously going way beyond the analysts' expectations. A prime example is Nvidia's achievement in the first quarter of this year, reaching $26 billion, surpassing the analysts' consensus view of $24.6 billion. Despite its extraordinary growth, Nvidia's stock price is reasonable, bearing in mind the company's future potential. as their price-to-earnings ratio is 44 times their expected earnings the upcoming year. Jefferies still believes that the best hasn't come yet, as they presume that many more products will be run by Blackwell in the near future. Today, the only obstacle that's preventing Nvidia from earning an even larger revenue is keeping up with the demand, as at this point, the demand has outnumbered the supply. And although it's not likely for Nvidia to keep growing at this same rapid pace ultimately, this still remains in question, taking into account that AI is still in its early stages. Maintaining the same magnitude of innovation would put Nvidia at about $328 billion in revenue by 2028, enlarging its revenue by 50% in 2025, 40% in 2026, and 30% in 2027. If the company's adjusted operating expenses kept growing by an average of 13% each quarter until 2030, along with the application of a 20% tax rate on its operating income, the company could generate about $165 billion in adjusted earnings by 2027, reaching a price-to-earnings ratio of 30, which would make Nvidia worth an astounding $5 trillion by the year 2028. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
I'm looking at the notes here. Well, I'm good. I'm not as good as you think Nvidia is going to be, though. I mean, these are not typos. You think it's going to head close to 70 times PE before the end of the year, and it's going to hit $6 trillion in market cap at $250 a share? Do tell.
I think so. I think so. By the end of the year, as people start to look forward to what they're going to do in 2025. Yeah, like I know you talk all the time, Scott, to people like Stacey Raskin, who says, you know, this stock is still cheap, and yet nobody seems to believe it. But here are the numbers. Over the last 5 years, Nvidia's average look-forward price-earnings multiple has been 40 times. Yesterday, after this 2-day correction, it was 39 times forward price earnings. But there have been 3 times in the last 5 years where it's had a look-forward price-earnings multiple of over 50x, and 2 times in the last 5 years where it's gotten just about to 70x, and then it pulled back. So we just haven't seen that euphoria yet.
It didn't just pull back at those times. It got destroyed.
It got destroyed, yes, a couple of those times. So, this is a high flyer, and expectations can reset on a bad earnings report, but they can also get equally overhyped on good news. And despite the fact the stock's had an enormous run, the euphoria hasn't yet caught up in terms of the go-forward multiple. I think what's going to happen in the second half of this year, as people start to see how well the Blackwell chips are selling, how good the gross margins are on those, and start thinking about what's to come with the Rubin chips around the corner, their next generation after that, I think we'll start to see that euphoria reflected in a lofty go-forward price-earnings multiple. And if that happens, this thing could go to $6 trillion market cap.
You don't think they're over-earning at all right now, just based on the flood of orders? They're kind of the only game in town.
Well, they're selling to these big hyperscalers. But think about it. Who are they going to sell to? They can't make enough of these chips to sell to everybody on the planet. So they got to prioritize. Why wouldn't you prioritize to these hyperscalers who are putting in orders, as large as they possibly can to lock up as many of these chips that they can currently get their hands on, the H100s, H200s. And so that's supposed to be a bad thing. That's supposed to be a sign that, it's overly concentrated to these folks.
Well, it's not a bad thing. I don't think so. It is what it is. But I mean, you have to extrapolate what you think the future is going to look like based on everything that you just said right now. I mean, there are other competitors out there who are going to be making chips and selling them to potentially the hyperscalers too, and other players as well. Granted, Nvidia has the whole football field to itself, so it can go up and down the field unabated. There's no defense, but eventually there might be some defense on that field.
Years down the road. So they've got to use your analogy, Scott, they've got 80 yards of clear turf in front of them to keep running towards touchdown. Nobody's catching up to them. There's just a bunch of lazy linebackers behind them. So I think it's years away from that happening. They're gonna take advantage of that lead that they have, and it's not expensive. Coatue had an earnings slide recently that talked about how this is not Cisco in the .com era. Back then, Cisco's go forward PE multiple got to a peak of something like 136x. Again, we're below the mean for the last 5 years. So even though the stock has done so well, it is still relatively cheap compared to where it's traded in the past.
In my perspective, it's not too late at all to buy Nvidia stock, even though the company's previous success might seem hard to repeat, and the firm could either exceed or subsede any projections or estimations. This is because the company still has a huge potential as it plays a crucial role in the AI market and the future of the tech world, so I would still definitely recommend buying Nvidia shares. Keep in mind that analysts predict that today's $200 billion AI market may surpass $1 trillion by the end of the decade, and if Nvidia continues to dominate this rapidly growing market, the company's revenues and stock price will surely increase. But what do you think about Nvidia stock? Is it a buy at the current price? Let us know your thoughts in the comment section. And don't forget to tell us what your valuation for Nvidia is. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.